All right, guys, before I get started, I want to let you know about our Ichimoku Master Class that's coming up in January. Starting January 4th, every Monday for 13 weeks, you will get solid intensive training on Ichimoku. So we'll take you from the beginning to the very advanced stuff. So it's going to be 13 weeks of classes held every Monday for approximately 2 hours, webinar sessions. So what's going to happen, guys, is I'm going to take you from the very basics to understanding the wave, the time, and price analysis. But we're going to start out with the very basic stuff as far as knowing all the 5 lines and what each 5 line means. And then we'll progress into the trade setup. So we'll understand how to trade TK crossovers, Kumo breakouts, Kijin-sen bounces, Kijin-sen breaks, and so forth. And then from that point, we'll move into the more advanced stuff where we start looking at the time analysis, the wave analysis, and the price analysis, and we'll break those down in detail. And you will be an Ichimoku master after you take this class, because you'll know just as much as I do. Okay, so at this point, guys, this class is starting January 4th, and you can sign up on my website. All you have to do is visit www.fx@oneglance, as you can see up here, and just go to the home page. Where you're on the home page, you'll see Ichimoku Masterclass. Click that masterclass and then sign up. This class is a $300 class, and it's going to be lasting for 13 weeks, and you're going to have solid webinar teaching for a solid 2 hours. And then, guys, after that, you can still take this class. If you miss the sessions, you could still watch the course inside the course. You can watch the video inside the course. So you'll still be able to see the course, still be able to take the course, and you'll be able to have access to it for the rest of your life. So you'll have that course for you to learn and go back to and always understand. And anything that's upgraded on that course, once you sign up for it, you'll receive those upgrades too. So farther down the line, maybe a year or two from now, I add more content, you'll still be available for that. So you'll get that also. So just wanted you to know about that. And that's starting January 4th, and it's going to be every Monday, and the session is going to cost you $300 to attend all those sessions. Well worth the profit, well worth the money that's going to be provided for that. So again, go to the homepage and go to the Ichimoku Masterclass, and boom, sign up, and I hope to see you there. All right, so let's get going. All right, guys, so we're going to talk about this trade we're still in. We're going to update a little bit, and we're going to continue with the trade. But first of all, we were looking at where we entered this trade. Let me get this. So we basically entered the trade on this candle here. And we kind of set our target. Here's our target. One thing that I wanted you to know and understand was this is the daily time frame. So on the 4-hour time frame where I entered the trade, the market pretty much retraced. All right, so when that market retraced, it retraced back to this daily level that we were looking at, which is right here. And we kind of expected that because we knew this was a very nice structure level right here. So we kind of expected the market to come back into this area. So I usually like to make it into a zone. So when I'm looking for that correction, I'm thinking that the market's going to drop back into this area. So pretty much when we took the trade and then we saw it start to correct the next 3 days, because when we took the trade, we just went back right straight into drawdown here. So as soon as we took the trade, automatic drawdown, and then the next thing you know, we pulled back to that level. So that was the major level that we were looking at, and then the market, as you could see, took off from that level. Now a lot of times we'll wait on a trade. We won't take this trade here, and we'll wait for the structure move for the market to pull back to this level, and then take the trade. At which point we would have probably still gotten in pretty much close to where we are now, because the pullback wasn't that big, considering it was a little bit, but it wasn't that big. All right, traders. So we are looking at this Ozzy yen trade. I didn't come back to the trade before it closed, but I'm going to just explain to you what took place for me. What actually happened was last night I went to bed. I still wasn't at my profit level, and I had moved my stop loss up, but I felt like, well, tomorrow I'll be able to change and move my profit level and see what price does. I wanted to move the profit level a little bit higher, but I didn't get an opportunity to do that. So I got taken out of the trade. So here's where I got out of the trade at this level right here, 78159. So that was my profit, and I got out at that point. Let me remove this for you, and then you could see what's still happening here. So if you look at this, I'm gonna go to the daily time frame. The daily time frame, pretty much, we really wanted to look at this level up here, where the market is moving to. And this was going to be the level where we ultimately look at taking total profit, because it's a resistance level, quite possibly basically a double top coming up to this point. So you may see some retracement here, or you may see the market fall here. So we're looking at that level. That's what we were looking at, and we were going to hopefully get our profit at that point. But we did not move the stop loss. I mean, we did not move our take profit level, so we got taken out at the take profit level a little bit lower. Now we're going to watch the market and see what it does at this level here, because this could be a nice double top level where we see the market move back to the downside a little bit. Also, Ichimoku, we're kind of flat here in this little area here, but we had a good retracement, and now we may be moving back to that big N wave that you're going to probably see. So I'm looking at a big picture. We went up, then we down, and then possibly back up for a good while. Long term, you're looking at a lot of areas where we could start looking at support and resistance. So what I like to do is I like to mark the next levels pretty much until I get to the ultimate level. So basically, I'll look to the left, look to see where the market can move up to, and those will be the levels that we look at the market moving to. Ultimately, maybe when you look long term, you could get up into this area here, figure out what those support and resistance levels are, and see if the market could get to that point. So if I'm looking at a big Ichimoku N wave, then I would be looking at my target, probably see where we would be with a big N wave here. And I really don't like to use these big wick candles because it's not conducive to what the actual market was doing, well, is normally doing, but that's what the market was doing or did do at that point. Let's move this down here, see where we are. So 1-to-1 would give us this level up here, pretty much going to be close to this support and resistance point. And if we take this long wick off of this candle, because like I said, it's not conducive to what you're seeing normally with the price action. So maybe if we give it just to this wick here and then mark it, and then you'll see that this big N wave comes 1-to-1 right to this support and resistance area. All right, and we can mark that area as a zone, because we would put the upper level. This would be the upper level. This would be the lower base level. This would be a zone here. And that would fall right into the 1-to-1 ratio. And if you're not sure what I'm talking about 1-to-1, I'm basically talking about an Ichimoku N wave, which is a measured move. Okay, so when we look at that, we're looking at, I'm going to draw it out for you, basically. Let's draw this thing out. We're looking at going from here to here, right? And then we're going back again to here. And then the N wave completes at this point, because you have a V wave here. And then now you complete your N wave up in this area. So long term, thinking about the market moving there. And it's not just a straight path up to that point. You could see how this was a nice, pretty good path straight up to that point. Then the drop, and then the move higher. Here you had your V wave. So you had your I wave, your V wave, and then your N wave. So that would take you to that target overall. All right. So I'm out of the trade, but we may see a drop and then a possibility to get back in, because when we look at Ichimoku and everything that is on the chart, let's go here. So when you look at the chart itself, you could see a nice cloud that's angling to the upside. So span A is aiming to the upside. Span B is also angling to the upside. All right, you could see the nice angle to the upside for both of them. You got angulation on Tenkan-sen and Kijin-sen, and Chikou span broke above price, and you need to get through this resistance point here. Now I like to make this level a zone, and it's going to be, again, it's going to be a double top basically, but I like to make it into a zone. So this is where I want to see what's going to happen with price action at this point. I want to see if the market's going to falter here. Okay, so let's watch to see what the market does here and then we'll decide what we're going to do with our trade entry if we could get back into the market. Now, if it drops, I'm going to look for it to come to another level. So watch to see if the market comes down to this point. Actually, that's not even my level. I'll mark that as one level. But let's really look at this point here. See if we only drop to this point. Okay, so if we only drop here, see the market drop to this point, and then this level holds, and then we see the market push back up again. I'll look to take a trade here. Now, if we break through this structure level, we probably go to this point. At that point, I will look to see if I get in a trade. So I'm going to be looking to get back long at these 2 points. Now, again, if the market's going to violate this level, then what it's going to do is, if it violates this point, what I'll look for then, if we violate, I'm going to just look for the market to violate and then retrace back to this zone here. And then I'm going to look to go long again. All signs on Ichimoku are bullish. You got a crossover that's bullish. Your twist is bullish. Your Chiku span's bullish. Price is bullish. So everything's bullish, telling us to take this long opportunity. So that's what I will be looking at. All right. So there's some good opportunities on this Aussie yen pair. Okay. And I like a lot of things about it. Basically, it is strong. I did show you that N wave, that big wave to the upside where the completion could be. Also looking at the entry levels where we could look at getting back into the market. Okay, and looking at points. So we got a couple things that are playing out on this pair that we need to be aware of and watch for. All right, guys, so let me tell you a little story about this Aussie yen trade. And really, I'm telling you this story because it just shows the mentality of new traders and also the mentality of traders, period. I mean, it's like we want exactly to get that profit right off the bat. You know, we don't give anything a chance. We don't have discipline. We don't have patience. First of all, we had a new member join our membership 3 days prior to me posting this trade. All right, so I send the trade alert out via email, and he gets the trade alert, and then he takes this trade. We entered the market here. So he takes this trade. The entry was at this point. The trade moves up higher and then drops down, moves up higher, drops down, and then eventually it takes off for us. All right. And we had a stop loss below the fractal level here. All right. The minimum stop loss should have been below this fractal level here. All right. Because we kind of use these fractal levels for stop losses for sure. But the trader enters the trade. All right. He's been a member for 3 days. This is the very first trade alert that I've sent to him. He takes this trade, and when I set up the trade, I have the stop loss here. And I'm always telling members that, first of all, your stop loss has to be technical. And another thing, if first you find the technical level and then you install the money management. So you install your 2 to 3% risk for that. So that means you just have to adjust your lots to fit the trade, or else you don't take the trade, period. And also you want to get at least a 1-to-1 risk reward ratio, because the 1-to-1 risk reward ratio, if your stop loss is 50 pips, let's say, you want to get 50 pip profit, because at 50 pips 1-to-1, what you want to really do is take 25% of your profit at that point. All right. And then you can let the rest of that trade run. All right. And then you never want to bring your stop loss to break even. You want to bring it slightly above break even. Why should you break even on a trade and when you could get some profit? Okay, so never break even, be a little bit above break even. But at that 50% level, and you take 25% of the profit, doing that all the time, you're never, if you're just a 50% trader, so you win one, you lose one, you're still up. You win 5 and you lost 5, you're still up. Okay, so that's why I look at the 25% profit at 1-to-1 ratio. All right. And then from there, you can judge what you need to do. And then you always never want to break even. So if you're always doing that, then you're always making some kind of profit if the trade's going your way. But this trader got into the trade, and I believe it was, if you look at it on a daily time frame, I can't remember exactly. Let me mark it so I can see exactly where he informed me. So pretty much, okay, so I believe the entry was this day, and I believe this third day right here. this day right here. He calls me, he doesn't call me, he sends me an email and he says to me, I would like a refund. And I'm saying, why? Why would you like a refund? And I said, because basically what I did, I looked at what you've been doing since you've been here for the 3 days. And I see that you were inside the courses for hours, a couple hours, 12 hours or so. And you took some courses already and so forth. So why do you want your money back? And he says, because I followed your last trade and it was a loser. I was just like flabbergasted. I almost fell out on the floor. I couldn't believe that he was saying that to me because, first of all, the very first trade, we take the trade. He doesn't make profit at that point, and he's telling me that he wants to quit already. The main thing I'm telling you right here, guys, is a couple things to understand. First of all, how was I profitable and other traders profitable, but this trader wasn't? This is what I always try to tell people, that we could all trade the exact same thing. This is why I try to tell people, don't ever even ask me, what my win ratio is, how many I win, or what's the winning percentage of what I'm trading or doing. It doesn't even matter, because what I'm just showing you tells you to the fact. Because other members took this same trade, I took the trade, and I showed you where our targets were, and you see what happened with the trade. You see where my stop loss was set, and you see where the trade went. Other members made profit. This member didn't make profit. Why didn't he make profit if he would have done just like we've done? Well, new traders, and not just new traders, all traders, breaking rules, not disciplined, not patient. One thing that we want to talk about first, the breaking rules. Where was your stop loss set? Was it at a level that was 2 to 3%? And was it also at a support and resistance level, a level that was a structure level where the market had a point that it could pull back to? So you need to know that. All right. Patience. Did you give the trade any time to really move or do what it needed to do? Did you understand the market structure? Things like that. No. Discipline. Being disciplined with your trade. Did you have a stop loss level set? Did you let it reach that level? Were you letting your trade do what it was supposed to do? All these types of things are what causes people to fail. So I really don't like people to even ask me what my percentage is and thinking they can duplicate what I'm doing or duplicate what someone else is doing, because you're not going to be mentally prepared to do what I'm doing or what somebody else is doing, because psychologically you're going to be different when you're taking a trade. Things are going to affect you differently. As you could see, why would a trader send me this email and tell me that he wanted to cancel his membership? And I'm going to show you that real quick. Hold on 1 second so you just understand and believe what I'm showing you. All right, so here you could see I cut it out because I didn't want you to see the person's email and address and stuff like that. But you could see it was to me on Sunday, December 6th. And it said, and this was in response to me asking him, why did he want his money back? And he said, because I followed your last open trade, but it all result losses. All right. It did not result in losses for me. Did not result in losses for other traders. And it did not result in losses if you would have followed the directions to the trade. This is one reason also why I don't like to put out trade alerts, because I don't want people to put me responsible for their trade that they take or don't take or whatever. I don't want to be responsible for what you do. All right. So that's why you need to understand what you're doing. And I really don't like to do this kind of stuff, because this is just exactly what happens. And then you get a new trader that loses, and this is what the result is. And sometimes you may get a new trader that loses a big chunk of money. So I don't know how much he lost, but I don't want to be responsible for that. So this is why you need to really learn how to trade your own self and manage your own money. All right. Not relying on someone else to do this stuff for you. But the main aspect of this, the main thing that I'm trying to let you understand is the mentality of traders. All right. This is what kind of mentality that we have traders coming into this market right now. And you can't have this kind of mentality coming into the market, because the market will eat you alive. OK, because first of all, really, the trader didn't even understand anything about the trade, just took the trade because it was posted out there. All right. And so maybe I need to find a better way of not letting that happen to people. But really, I can't control some things that people do. I'm here to try to help you to learn and understand things. But this is what we have with traders where the mentality isn't right. First of all, you're not disciplined, you're not focused, you're not educated, you're not patient, you're not following any kind of things that are going to help you to be successful. And this is what we have. So this trader would have, and in the end, after I talked to him and explained about understanding structure and all that and patience and your trading mentality, he decided to stick it out, right? So what happens here, this trader buys my course and he's not successful. And then he goes to buy another person's course. He's not successful. And then he goes to buy another person's course. He's not successful. It's not the learning that he's getting, all right? It's the person theirself. There is no holy grail of trading. You're not going to be successful on every trade either. You need to learn to manage your losses, all right? Managing losses is the way to become a successful trader. But in managing losses, you also have to manage your mental psychology with a trade, getting into a trade and getting out of a trade. I also have traders today where we're talking about the market and they don't know what to do. Like they got out early, all right, and they're not understanding why they should let the trade run, or they're afraid to let it run. And they're telling me these things. And guys, these are the things that are causing traders to fail. It's not the trading system. I could give you 3-4 different types of trade setups, different systems. It's how you manage the trade, and the way you're managing it is because of your trading mentality. You are not disciplined, you are not patient, and you don't understand the market structure. These things are going to cause you to become failure. All right. So most of trading is going to be psychological. It's going to be all mental. All right. Because when you get into a trade, are you getting into the trade because you're afraid of missing out? Are you getting into the trade because you're gambling? First of all, the one way that you're gambling is, you know that you should get into the trade at this level, but you don't get in at that level. You get in before that level because you want to beat the market at its own move. You want to catch the move before the market even makes the move. And that's why you lose trades, because the market never made the move that you were expecting it to make. So you shouldn't have taken the trade. All right. So therefore, these are things that are causing traders to fail each and every day. All right. So it's really a mental thing. It's more mental than it is your trading system. Again, we're all trading the same system as I just showed you, but this trader, you saw what he sent me and what he said, he failed the trade. And I showed you that I didn't fail the trade, and other people that took the trade did not fail this trade. So why did he fail the trade? All right. It's the same thing. So don't ever ask a person, what's the win percentage of this trade system? It doesn't matter about that. What matters is when you're taking the trade. Now, if this trade was automated or something, if the system was automated, then it might be something that you can ask. But if you're doing this yourself, it's more mental. Okay. So that's what I really wanted to show you guys and let you understand. So I really feel bad for people that are getting caught up like this. And I see this all the time. Okay. So just wanted to really let you guys know that and let you know that, again, the trading is mental. So you have to focus. You have to develop strength mentally. And I'm going to be putting out a course about mental trading. All right. So about the psychological aspects of trading the market. But it's just sad. This is really sad that you see this kind of thing happening to people trading these markets. But it is what it is. That's why education is important right there. Okay, so let's look at the rest of these trade setups. So I'm in this Ozzy New Zealand dollar trade. This was a 4-hour time frame. If you look at the daily, I'm very bearish, but where I got in on the 4-hour, I expected price to go up to this point right here. So this is where I was looking for price to move up to. So let's mark this on my chart basically so you could see when I go to the 4-hour. So even looking at the daily, I kind of looked at the counter trend move. Got a big thick cloud, let me know that the market was probably going to move a little bit back to the upside to retrace a little bit. And you can see span A aiming to the upside. They're getting tighter now. As you can see, they had more distance here. So these thick clouds are big signs for me. Everywhere you see a thick cloud like that, it's usually a top or a bottom, as you could see. And this is a bottom here, or more than likely. and then the market retraced. So when I go to my 4-hour time frame and I was looking for my trade, I pretty much entered the market at this point right here, where we broke out of the TK zone right here. So we had a TK breakout, and I entered the market on the close right there. And then I'm in the market still. And I expected the market to go here. Now we made more profit up to this point. Probably looking at this candle closes at 1 o'clock. It's now 10:15. So it's just open, and you can see it pretty much open for an hour and 15 minutes. And you can see it's pretty bearish. So more than likely, if it's below this level, I'm going to probably take profit here. Okay. And then when I go back to this chart, there's a possibility that we could see this daily time frame continue this trend back to the downside. All right, possibly back to the downside, and continue that move to the downside. Now, that big thick cloud I don't like, but we are getting a retracement from that, so we'll see what happens. But in profit on that trade, and about to get out of that trade more than likely. Got a couple other trades that are open. I got also this CAD yen trade. Looking at this, let's go to we're on the daily time frame. So looking at the daily, you could see pretty much a flat market. So let me show you where I'm seeing it's flat. This is the top here. And this is basically where we were flat inside this area. And you can see what Ichimoku is doing, back and forth, the crossover, blah, blah, blah. So not real good. Also, this is a strong level up here. So I'm going to mark it as a zone. I like to mark zones with the wicks. We want to see what price is going to do at this level. Again, if we break through, because on Ichimoku, we do have crossover that's bullish. But we have so many crossovers with the cloud. Kumo twists, we have a couple Kumo twists in here and a couple TK crossovers, many, which is not good, which pretty much lets us know that we're ranging. So with that being said, and I don't really see a real formation as far as like a triangle pattern. What I see mostly is this flat market right here in this level. But we do have angulation on span A. Span A is angling to the upside. Span B also is, but span A is angling to the upside. So span A is going to be on top in an uptrend, and on the bottom in a downtrend. So it would be down here. Previously, when I looked at the previous chart, I was talking about span A down here, because on a bearish market, it's down on a crossover. On a bearish crossover, it would be below. On a bullish crossover, it crosses over, and then it's on the top. It's angling to the upside really strong. And we're hitting this level strong with angulation on Tenkan-sen and Kijun-sen with a big candle. We need to see what's going to happen here with price action. So we'll watch. If the market breaks through this level and then continues higher, we'll again look for the market to retrace back to this level for our entry. All right. So back to the structure level, and then back for the trade long. All right. So that is CAD yen. And then I'm in the Euro CAD. Now, daily time frame here, you could see pretty much not any kind of real trend happening here. You have a trend pretty much from this point here, which was a small trend. But when you go to the 4-hour time frame and you look at that, you could see where we were. So what happened for me was I've been taking more TK crossover breakouts, TK crossover trades, sorry. And at this point, I haven't been taking them previously a lot, just because they're so far from Kijun-sen, and I haven't been taking them because of that. But I've been doing a lot of studying and a lot of looking, and yes, I get a good retracement. And I always tell you about the 10 candle rule after the TK crossover. Pretty much going to pull back within 10 candles. Normally around 10 candles, you get a pullback. So after you get your crossover here, you get about 10 candle pullback. A 10 candle, within 10 candles, you pull back. All right, so here's a crossover. Then within 10 candles, we kind of pull back to the TK zone. And you can see that did happen, and the market dropped back to the downside. What I did at this point, we were pretty much boxed in here, because you didn't go higher really than this candle. You never really closed, so you were really inside this box. You never closed outside of the box to the upside. All right. And you never closed to the downside, really. You had a little close here. So what I did was put an entry below all those levels. And then I got triggered because we already had our crossover. We're already bearish. So your cloud was bearish. Your crossover was bearish. Chico span was below price. And when price broke, Chico span broke below the cloud also. But we were already below price. So it wasn't no big deal. We had every sign that we needed for Ichimoku, all strong signs. And the market was heading our way. Angulation nice. Thick cloud wasn't that bad. I mean, it got a little bit thicker. And as you can see, span A is dropping to the downside, aiming to the downside. We want to continue following span A. So we're in this trade. See what happens with this. Back on the daily time frame, you could see where we were. So you could see that little box. So what I would measure now is, am I going to get to my target? I can have a target at this point. All right, because you could see that's pretty much a good support and resistance level. And then if I look at my 1-to-1, I don't like using these long legs. So I used a long leg that happened here too, right there. So that brings me a little bit lower than that level, but within the zone, as you can see, because this is a zone pretty much based off of the wicks. So if I make it into a zone, our target is inside this zone. All right. And then when I go to the 4-hour, if I mark, I use that candle, and I'm pretty much where I need to be with everything. Pretty much where I am. So you could see target pretty much down. 1-to-1 would be here. So 1-to-1 is just a measured move again, which would bring us into this area. So basically, overall, we probably just shooting for this level here, at least 153,656. All right. So let's go to another trade. I believe this is my last. I have 2 more trades that I'm in. This euro yen. Now I'm losing this euro yen. About to get out of this trade right now. My stop loss level is here. I should be out of this trade already. All right. And then I really had a small profit here, and then the market went against me. And when I look at that, it's because if I look at the daily time frame, really, what I was expecting was the drop, because we got so much distance on Tinkinson and Kijinson, all right, with price. But more than likely, we'll probably range up in this area, all right, before we see Tinkinson and Kijinson catch back up, or else price will drop. So either or. So at this point, I'm more likely getting out of this trade here, all right, because basically I don't have anything really to stay in the trade for. Everything that I got in for is non-valid anymore. So I'm gonna end that trade. All right. So I closed that position out because basically everything is against me that I really wanted. Now, yes, I am at a good level. All right. And I could have stayed in the trading to see if we break back to the downside, thick cloud. But we do have angulation a little bit on span A, still aiming to the upside. So we may see this just as a pause right here, a pause area, and then the market continue back to the upside. All right. So you could see a pause area and then the market back up. Now here we kind of retrace real good. So we had one leg up, down, another leg up, maybe getting that leg down and then back up. All right. And what do we got there? What is that? Anything? No. All right. So I have one more trade. So that's a losing trade for me. As you see, I lose some trades. So I don't post everything that's positive. I'm showing you what I'm trading. And I'm also losing this trade at this point right now. Let's go to this is the New Zealand CAD, and let's go to the daily. So my daily trade is basically, I'm looking long because basically we got TK crossover that's bullish. We had some distance, but we dropped back down here and we had a thick cloud. So this thick cloud let me know that this probably was a top, and you could see what the market did. And that's just what happens. You got that thick cloud, got a top, the market drops to the downside. And now you can see we dropped. At this point, we're looking for the market to possibly move back to the upside here. So when we were on the 4-hour time frame, what we were looking at. So with the drop, oh, I got noise outside. with the drop, we were expecting the market to drop back down into this zone. And really on this trade, guys, I really should be setting my entry at this point, looking for the long opportunity. A little counter trend trade here, because on the 4 hour we got a TK crossover that's bearish and angulation is strong to the downside. So I wanted to break this level right here, and if price really, it should have been a little bit deeper, because this is really the level down here, as you could see. So I wanted to see the break of this level really, and then take the trade to the down and keep the trade to the downside if we can break through this level. If we don't break this level here, we're probably moving back to the upside and going to see this market move back to the upside and follow, because on the daily time frame, that's pretty much what it looks like. But with this thick cloud, we could still possibly see some more downside. This could be our pause. This could be our drop, our pause, and then drop. We'll be breaking back below Kijinsen at that point on the daily time frame. But daily still bullish, but starting to see signs of weakness based off of this big thick cloud. Got a little drop here, going to get a little big correction. Maybe we'll see this thing drop even more. But back to the 4 hour. This is the level where we need to close below to really signify the continuation of this trade, okay? Because we were already crossed over bearish here. We were already bearish on our future. We already bearish on Chiku span with a breakthrough of the cloud. And I just really wanted to take the trade on this level. Actually, I should have been lower with my entry. I'm a little high because I based it off of this level right here. And in reality, I should have based it off of this whole level. So a little thing I should have paid more attention to was this level, but I entered the market at this level when I should have basically waited for it to get through this level. All right, because this is more of the support level. Now really it's a zone here, because you could see right here, this is a little zone, and I would move it to the level where I entered, because you could see now that's a zone right there. So entering the trade at this point with angulation to the downside, all Ichimoku signs bearish on the 4 hour, I was looking for that entry. We'll see what happens here. Not going to give it much room to really take me too far to the downside. I mean to the upside. All right, because at that point I'll be paying attention to this daily time frame. Okay guys, so I'm watching this trade at this point, and we'll see what happens. And that's all my trades right now. So again, if you want to learn how to trade Ichimoku, got my big Ichimoku Master Class coming up in January 4th. It's going to be 13 weeks of intensive training every Monday night. You can log in and we'll have a live webinar session for approximately 2 hours. 2 hours per Monday, every Monday for 13 weeks, where you're going to learn the full details about Ichimoku. I'm going to take you from the basics to the advanced stuff. So we go basic, understanding each line, understanding Tengen-sen, Kijinsen, understanding the spans, what the spans mean, and then we'll go to the trade setups, the trade setups that each setup has with Ichimoku, as far as your TK crossover, your Chiku span breakout, Kumo breakout, and so forth. We'll learn all the trading signals, all the trading aspects of Ichimoku, and then we'll go to the time analysis, price analysis, wave analysis theories, and we'll look at all of those in detail. So you'll know inside out about Ichimoku. You'll know just as much as I do, okay? And you'll be able to just trade Ichimoku. So again, masterclass coming up again January 4th. If you want to be a part of that, just log on to my site, www.fxatOneglance.com, and look at the masterclass up in the upper right hand corner. You'll be able to click that masterclass and enroll for that course, and you'll get an email with a link to join each session. And from there, guys, it's all up to you. But hopefully this one helped you out. And until next time, guys, have a great one. God bless. So long.